The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to a Bill in Boca Raton. Hey, Bill, what's going on?
Not too much. Enjoying the warm weather in Florida just like you, except on the other coast.
Perfect, man. Perfect.
Yep.
You listen on the internet right now?
Yes.
Cool, man. Cool.
No, I enjoy that. That's in your Tiger TV and everything. I've been watching you for years, and you've really taken this whole programming to a level that's just phenomenal.
I appreciate it.
And now, here's Tom O'Brien.
Welcome, folks. Good day, traders. I'm Steve Rhodes, Tom's guest host. Tom is a little under the weather. I don't know if you caught the Money Master show this morning, but he did everything possible to try to be here this afternoon. So let's send out a little white light to good old Tommy O'Brien. He could use it. You know, it's there's nothing worse than feeling bad, especially when you live down here in Florida and you've got absolutely fantastic weather. But again, welcome, and thanks for joining us. You can catch this show live on Tiger TV, folks, and you really want to do that. Go to the homepage of TFNN, click on Tiger TV. You know, you can follow us now on all your devices, whether it's iPhones, whether it's Google, Android devices, iPads, and the reason that you want to do that, or maybe you want to go ahead and you want to check out the archive of the show, what you want to be able to do is you really want to be able to follow it on Tiger TV. Why? Because the way that your brain operates, 20% of what you visualize, what it is that you see, your brain processes, and it's so important. And the other 20% of your brain and stimulation, if you will, is done verbally. But here's the thing, when you put both those together, your brain is able to process 50% of it. You know, you get extra value, if you will. So when we go take a look at the markets right now, you had the Dow finished down 162 points. It was down 1 3/4%. You had the S&P down 1872. It finished out the day at 1236.47. You had the composite down 34.5 points, finishing out at 2612.26. You had the small caps down 12 points, finishing out at 733.15. The NDX down 26, and King Dollar. Where was King Dollar, folks? In fact, I want to show you King Dollar. This is so important to understand King Dollar because it was all about King Dollar, and there's our King Dollar there right now. That's it, the great one, Tom O'Brien. He's the one that has been calling the King Dollar. He's been calling the correlation of the markets. And I'm going to show you the correlation of the markets so that you can understand what is going on and why. And so if we simply, take a look at the dollar index finished up, right now it's trading up 89 ticks. And if we go take a look at this chart here, this is a real important chart to understand, and that is just simply the correlation. Now I'm going to go ahead and throw up the S&P cash. So this is the XPX, and I'm throwing this up here on a 5-minute chart. Now, this is the way to be able to take a look at how the dollar index is almost moving tick for tick with regard to the general markets. So the blue line that I've got on my screen, folks, that is the dollar index inverted. So you know that if the dollar index is going up, the markets are going down. So in order for this chart, in order for these lines to make a lot of sense, what we've done here is I've inverted the dollar index. So you can see how it's moving lockstep, and that's so important for you to understand. Why is that important for you to understand? Because you want to understand what's inside the dollar index. And so you'd go over to the currency marketplace, and what you would take a look at is the Euro-US dollar currency pair. Let's go ahead and take a look at the daily chart. I'm going to throw that up here on my screen right now. What you're looking at is the daily chart of the Euro-US dollar. And what you can see today, right now, it's trading out at 131.854. And it's inside the swing point from October 4th. Now, you know how important the October 4th swing point is to us, because when we take a look at high volume lows that we have in our marketplace, they almost all go back to October 4th. In the currency market, we really don't have the volume because so much of the currency transactions done through all different sources out there, and so there's not one single exchange where we can go and find the volume. So what do we do when we're taking a look at the currencies? Well, one of the things we look at is candle patterns. We look at long-range bars. Long-range bar are these long green or red if you're watching this on my screen. And if you take a look at today's action, in fact, when the currency market basically opened up last night, about 7:30, 8 o'clock in the evening, East Coast time, the currency market just simply continued to sell off. When did it get its juice? It got its juice at about 2 a.m. when London was coming online. And folks, no matter what happened on Friday, no matter what pushed those markets up, folks did not want to hold those euros. It was as if we got the invitation here in the United States, but we forgot to give it to the folks over in Europe. They decided they didn't want to join our party. I guess they felt snubbed, and so they decided to sell the euro, where we saw the euro bounce a bit on Friday. That's that green candle next to it, and what you can see, that's not much of a body. You've got a body and a wick, if you will. In this case here today, we've got a long-range bar down coming into the lows from October 4th. Now, the low on October 4th is 1.31444. We stopped just before that. And what's going to happen is this area is going to be attacked overnight. And that makes it very difficult if you're holding long or short positions, because this is all about currency. This is all about what's going on with King Dollar out there. You saw the correlation inside the SPX. If I went ahead and I put up the ES Mini, put up the futures contract, you would absolutely see that as well. And so when you're holding on to your positions in your ETFs right now, you don't know if the work is almost done in the euro, because what you're doing here is you're making a move of a move, right? And we all know, because Tom has taught us so well, that when you make a move of a move, what happens is you usually do something else. Well, in this case here, what would that something else be? That something else might be nothing more than just a simple retracement, maybe just a dead cat bounce, maybe just a 0.382 retracement that would take the euro up to the 133, 090 area, 133, 133 even for the most part, which would put a little bit of juice in these markets. And so then how do you really see what's going on? Well, you go over to the ETF indexes, you go over to the SPYs, you go over to the Qs, you go over to the IWM. That's the easy way for each of you to do that, because most of you with your trading platform software, you can take a look at that. And so let's take a look at the SPYs, because the SPYs actually gave us a piece of information today. How'd they do that? Well, they did that by coming down into this swing point where we had it, not a swing point, but they came down into the gap that occurred on November 30th. Now, what you're taking a look at is on the SPYs, you did 322 million shares. Now, you have this nice gap up here. In fact, you've got two gaps right now inside the SPYs. And the low on that candle from November 30th, the low there is 123.22. Remember, 322 million shares. What did the SPYs do today? The SPYs got down to a low of 123.16, closed out at 123.99, did it on 172 million shares. Doesn't have the volume right now to push its way all the way down. And so it gave us a piece of information. It was as if it was coming into a support area. So what does that mean? That means on the SPYs, because apparently folks weren't out buying stocks. They were out in the mall shopping, because you certainly didn't see it from a volume standpoint here in the stock market. So what does that set up? That sets up that you can go back up towards the top of this little consolidation range. You're forming this little island out here of folks that are either that are in the SPYs. And so where could if the SPYs, and really folks, this is all going to be about the currency market. I promise you tomorrow that when we show up, in fact, if you tune in and listen to me at 9 a.m., I kick things off for TFNN at 9 a.m. here. Then from 10 to 11, Tom and I do the Money Master shows on Tuesdays and Thursdays. I do another hour of the Trader's Edge. And so if you tune in tomorrow, I will absolutely be able to let you know where the markets are going. If you are a newsletter subscriber, you know that I follow those currencies. I get messages and information out to you so that you can understand what's going on in the market. Why? Because that's where the real correlation is. And you want to understand what's going on with the euro, U.S. dollar. You want to understand what's going on with the pound, U.S. dollar, and the Japanese yen, U.S. dollar, because when you take those three currency pairs, you've accounted for the majority of the dollar index. And that right now is where you want to be able to focus your time so you can see what's going on. But the SPYs absolutely gave us a piece of information. What else gave us information? Well, let's go take a look at the way that the Qs finished out here. We'll put the Qs up here on the screen. The Qs finished out the session, looks like at 50. What is that? 50. Let's see here. They finished out at 56.38, traded down to a low of 55.90 up a high of 57.01. You've got this little doji. You could kind of say between the bulls and the bears, it was more like a tug of war. You know, when you take a look at a candle like that, you know, what I picture in my mind is I picture, you know, being on a beautiful sandy beach in Hawaii, getting a little tug of war game going up where right in the middle you mark the spot and you went this way, you went that way. And so it was a fight between the bulls and the bears. And it was a draw today when you take a look at price with regard to where it opened up. Did it close down? Oh, it absolutely did. Did it give us any information? Well, if you take a look at the, just simply take a look at December 8th, where the last low on the way down, you did 51 million shares. What do we do today in the Qs? You did 54 million shares. Okay, so you're pushing that with volume. I'm going to bet that came in towards the close. We'll go dig down on the intraday stuff, you know, during the show as well. What else were you coming into? You were coming into that gap, again, of November 30th, that gap up candle. You did 66 million shares. You got to a high of 56.44. Where do we close today? Again, we closed at 56.38, so you closed inside that. So it's possible that the work is not done on the Qs. The spies gave us a piece of information. The Qs have got some decent volume, but that's got, it's going into 66 million, and you did 54 million today. Let's go take a look at the diamonds out there. Let's see what the diamonds gave us as far as any information out there. What the diamonds did today, folks, it's the first time here in a few days where the diamonds actually closed underneath the swing point from October 27th. Now, that's a real key swing point, and I'm going to show you that when we come back and do, in one of our other segments, because I'll go ahead and set it up. Now, folks that listen to, I happen to help Tom with his shows on Friday. Friday, Tom was starting to feel maybe not so well and under the weather, if you will, so I went ahead and joined him for those 2 hours, and one of the things that I shared with the listeners during that show was I went back and first we took a look at the Dow index going back into the 1932 time frame. Why? Because I had already done some work on that when we were taking a look at Thanksgiving breakouts, if you will, and what I was showing during that segment was the beautiful sacred geometry numbers, the 0.618 retracements, the 786 retracements, the 1.272 expansions, the 1.618 expansions, and because that's one of the things that I teach. That's one of the things that I use as one of my tools to place trades. That's why we're making so much money inside Mastering Probability. That's my newsletter service, folks, because I use those tools. Why? Because they were working back in the 30s. They are working today, and that's really what that chart was showing. So many times folks will say to me, well, if everybody knows it, then eventually, it's not going to work. That's not the way that it works, folks. All of us don't necessarily do the things that we know that we should do. And it works that way in the markets. What really works in the markets is just simply understanding that you have patterns in life. You have routines and rituals. You probably start the day the same way. You're driving home right now. You're driving home the exact same way unless there's some kind of traffic jam in front of you. And what it is that you've got that controls your life is patterns. And what's inside these markets is nothing but a bunch of you and me and all folks trading patterns. What's the beauty there, folks? We know what the patterns are ahead of time. We know about the Gartleys. We know about swing points. And when we take a look at the diamonds out here, again, the low on the diamonds was 120.45, 12 million shares. What did you do today? You did 6.2 million shares. Nobody was out there buying, and nobody was really out there selling, folks. 877-927-6648. Give me a call, folks. We'll be right back.